Hey everyone, I want to quickly talk about a tweet by Cathie Wood of ARK Invest. The other day, I think it was about a week ago, she made a tweet, or actually a retweet, about declining orders for robots in China. And that's interesting because the entire ARK Invest team has actually tweeted this out. It's about a robot manufacturer who saw declining sales or orders in China. And she used that in order to kind of pump her China deflation narrative. In the end, I think her main objective here is to say that, well, look, China's decelerating, there's deflation, and the Fed needs to finally stop raising rates because that's heavily affecting the stocks in her portfolio, right? And in effect, it's also affecting Chinese stocks. But I want to just give you a couple of thoughts around this matter to think about. Well, I've covered at length here on the channel in the last couple of videos how the Chinese economy seems to be doing quite well from the consumer side. For example, if you're looking at the Baidu earnings, which just came out, and they were just highlighting how the advertisement business is rebounding just because of the fact that the COVID rebound recovery is indeed happening. And of course, I also spoke about, let's say, the stuff around the real estate sector, and I outlined that I think most of that is already in the backview mirror, and the Chinese government will possibly bail out if anything is happening in the worst case scenarios, like let's say if Evergrande or if China Country Garden, if they really pose a systemic risk, then they will likely be bailed out. But otherwise, there's kind of a bit of a price decrease there or less sales. This is actually quite in line with what China wants to achieve in order to switch to a new growth model. So I made these points in previous videos before, and with that kind of want to bring down expectations for stimulus. I think there will be stimulus in very significant areas like sustainability, EV, chips, manufacturing, smart manufacturing 4.0. And so with that also robotics. And now with the China data about this Japanese manufacturer there, it's interesting what they didn't say about those earnings highlights here of this manufacturer, which was that as soon as China opened up, there was a huge spike in orders for those robots, because before that they have been affected by the supply chain issues and therefore simply couldn't deliver. So it kind of makes sense that manufacturers, they scramble to get double orders for those new tools in order to pimp up their factories. But there might actually be also something else happening, which is that local manufacturers are replacing some of these overseas manufacturers, which is this Japanese one, right? So especially in the NEV segment, for example, XPeng, their suppliers are now increasingly using the Chinese domestic robotics companies for automatization, which is quite interesting as a trend to see. And maybe also with what China learned about how the US is reacting to the chips and the different bans and so on, maybe Chinese companies in particular, for example like Midea, which by the way bought the German robotics manufacturer KUKA, which is also very prominent in the automotive business, they may increasingly opt to order from Chinese robotics manufacturers. And that will be quite interesting to see going forward, because this is still a huge growth area and I think a strategic investment area also for China. And so with that, I think we cannot only conclude that this is a doomsday scenario here for the Chinese economy. I think there are various variables and reasons to explain why this was happening. And so for me, while I respect some of the research of ARK Invest, on the other hand, I've grown more skeptical about their takes about China, and I'm not sure why they mean to highlight this at this point in time, also when the HSI, K-Web and NIO and so on were just trading at significant support areas. It's really odd to see that kind of a China bashing also coming from somebody who's loving investing in innovation, right? And this whole deflation narrative, in a sense, innovation leads to deflation. It's a good outcome of innovation, and that should be at the heart of it. So the fact that you now can buy a NIO which is as good as a Mercedes at lower price is deflationary itself. And there are good aspects of deflation for it, and not for everybody they are good. For example, for the legacy OEMs, which have milked the Chinese consumer and economy for years with high prices and high margins. For them, of course, a deflation in the EV segment isn't great, right? And so I leave you just with this article by this Morgan Stanley analyst that you possibly want to read through about the positive aspects of deflation and a positive take of what's currently happening in the Chinese economy. And then also another Gavekal research paper, which I also posted in the Patreon community earlier this week, which I think brilliantly summarizes the state of the Chinese economy, not highlighting any risk signals there. But on the other hand, what's more interesting for them is what's happening with the bonds market, that seemingly nobody wants to buy the long and short dated US treasuries. And that's something interesting to see. Also in combination again with seeing that the dollar keeps on spiking and spiking and spiking. I'm pumping the narrative here that at some point this must roll over. And in fact, the RSI is overbought on the dollar. And so I'm not quite sure, where this all leads and where in the end the market will find the balance here. But I thought I'd give you a couple of my takes here on these matters before we start the next week. And then thanks for watching and see you in my next videos.